What's happening, people? Wednesday. Now, I'm all screwed up because in the NHL playoff stand, as you know, it's typically every other day. You play on Monday, then if you have a day off, then you play on Wednesday. Well, the Rangers played on Monday and lost, as we discussed, on Monday, or Tuesday, I should say. But today's Wednesday, they should be playing, and not they're playing tomorrow, which is really messing me up. The Yankees have
New Jersey.
Yankees have a gentleman's special, as they say, a business person special today in Minnesota, looking to salvage the third game of a 3-game set.
Yeah.
But we got Sean Ryan with us, and we were talking to Sean before, by the way, lead financial analyst at FactSet. I told Sean what we did for Butters, and I'm telling you,
it's going to be big.
We're going to do the same thing with Sean Ryan. And I messed up Sean Ryan with Sean Miller from Patriot Games earlier. I won't make that mistake twice. But this is, in fact, Market Call. Today is the 26th of April, 1 p.m. on the East Coast. Today's Market Call brought to you by FactSet Financial Data and Analytics, powered by Tomorrow. They're also our data provider. Now, one would think, looking at the S&P 500 flat on the day, there's not a lot going on, Dan. Why even bother? And you guys should be watching the Yankee game. It's a quiet day. Horse hockey, I say, because not only is it not a quiet day, we have earnings this afternoon we'll discuss. There is a lot going on here.
Yeah. You know, it's funny. Yesterday, we were talking about earnings. We were looking ahead at the Microsoft and the Alphabet earnings, but we were also putting pretty fine point on what we heard from UPS, what we saw from Whirlpool, what we saw from Cleveland Cliffs. And so I just think that's kind of really interesting. You know, we had somebody email us, and we appreciate all of your commentary, people. So please keep it coming. I think it's at the On the Tape podcast at riskreversal.com. I think that's kind of right. Or
just they can smoke signal too.
No, or you can tweet a guy. I don't have a Twitter
or send
account.
Rafis an email.
Yes, send Rafis. Amanda at riskreversal.com. Right. But somebody said to us, is mega cap tech the new gold? Which is kind of interesting when you think about it, like the safety trade in a way. And to your point about the S&P 500, we have the second largest equity in the entire stock market, up 8.5% right now. Okay. And the S&P 500, that's an index of 500 stocks, okay, is flat on the day. When you think about the weight of that stock in that index, right? I don't know. I think that's kind of interesting. And so the NASDAQ's only up, 1.25% or so. The RSP, if these guys can pull this one up, this is the equal 8 S&P 500. And, this is kind of interesting. Down on the day here. So I guess what we were focused on yesterday as it relates to earnings, old economy sort of things, right? Maybe kind of more interesting inputs as to what the economy is maybe likely to do in the not so distant future versus these companies like Microsoft that have massive moats, right? That have basically monopolies, huge market share, huge everything. You know what I'm saying, guys? So talk to me a little bit about that, because today doesn't feel that great with the S&P flat.
It should be. Things should be better. Google, the initial reaction to Google last night was the stock was higher. That's obviously not taking place. I thought the Microsoft quarter was fine. We talked about it on Fast Money last night, but it is still decelerating.
Yeah.
I mean, if you look,
let me tell you something. I listened to that conference call, and let me tell you,
they said AI every other word.
Satya came out hot. I mean, he and even, like we say this a lot when you have, a stock that's traded really well into its print, and it has traded really well. And we've also talked about a lot of the hype, right, in and around some of the things that have kind of caused this latest leg in the stock here. And you'd think that maybe, just maybe, they'd save a little in the kitty here. Do you know what I mean? Not come out so hot.
Full bore.
And they came out really hot. And I don't know. I mean, I don't see it as particularly bullish, I guess is what I'm trying to say, to see this stock up 8%, new 52-week high, and the S&P can barely get going.
Gene Munster actually said exactly what you said in terms of he was sort of juxtaposing the two calls and saying how sort of, I don't know, I guess Google, he used the term moderate, or sort of they tempered things down. And he said he never heard a Microsoft call like this before.
Never.
And my comment was, and I said, maybe they're trying to hide something. Then I backtracked because I don't think they're trying to hide anything. But I think they really see a deceleration in some of their core businesses. And they have to be excited about AI, because when you're a $2 trillion company, you need things to move the needle. People are making a big deal out of this Activision thing. I've said all along, I mean, Activision is sort of a rounding error for Microsoft. Yeah, I'm sure they'd love to have it as part of their cloud sort of suite of products, but it's not a game changer for Microsoft in any
it's
stretch.
Not now. If you think about when they made that bid for that company, was over $70 billion or something. It was January of 2022. It was really before the bottom fell out, before it was very clear that we were in a bear market. We knew that a lot of the kind of like unprofitable, higher valuation tech names have been correcting for months at that point when they made that bid. And I think probably, I don't know what the breakup fee is. I haven't taken a close look at it. They might be perfectly happy for this thing to go away, especially when you think about the regulatory action that is going to come down on all of these large language models and all these AI tools that they've partnered with OpenAI now. Maybe they just don't need this kind of regulatory kind of back and forth, because it's going to take a lot of wrangling here. And that takes me back to 25 years ago when the FTC, they were all over Microsoft for a lot of the practices that were deemed to be non-competitive. And, when they were involved in all that activity with the feds, they kind of took their ball off. They kind of missed the internet, if you think about it. And then they missed a couple other things. They missed mobile too. So here they are, firmly entrenched in cloud. Okay. They made this transition for the productivity tools. And now they have this, Azure, and now they have OpenAI. They seem to be in a great spot here. So why screw around with the gaming?
And the market is rewarding them in terms of valuation. Again, it wasn't a bad quarter. I mean, the numbers are staggering, but here's a stock that's probably trading now either side of 29 times next year's numbers. It's expensive. I think what the market is saying is there is safety in a company that has this kind of foresight, one, visibility, two, and sort of sticky base, three, and they are separating themselves from their rivals. And I think that's what you're seeing in terms of the stock. So I will tell you, I got this one wrong. I mean, I thought the stock would bounce when we traded, sort of that 225, 30 level. I never thought we'd get back to 300, yet here we are now. So decision time. There's a chart. We reached levels, as you mentioned, back from the summer of last year. We'll see if it stops here.
This is where it fails.
Or this is where it fails. And we have a pretty big volume day as well. But it is interesting to watch. And, one of the things I said last night on Fast Money incorrectly again was at 292 at the time Microsoft was trading. I think Google was 107-ish. I said, here's your opportunity for a pair trade, long Google, short Microsoft. That's wrong. At least for the short term, that's wrong. But in terms of the broader market, again, and we're going to talk to Sean about financials, we're saving it. But I mean, you can't discount what's going on in banks.
Yeah.
And yesterday was a pretty horrendous day on the broader market. And now all of a sudden, everybody's debt ceiling seems to be top of mind. I mean, a lot of not only CNBC shows, but other cable shows are now talking about it in a way that try to make it accessible for the public. But there's clearly some concern we're going to get pushed up to, I think, the 11th hour. And Terry Duffy was on one of the shows this morning. By the way, CME had a great quarter, talking about exactly that. He thought it could get pushed the 11th hour, and the market probably has not. I don't think the market has sort of priced that in.
Yeah, let's just look at the macro here for a second. Let's look at this S&P chart one more time here, because I'm going to roll through a few charts here. To me, you see where that resistance is, and I really feel like it's got a date with that 200-day moving average, which probably lines up with that uptrend. And let me just tell you another thing is that if Microsoft is as good as it gets, and we're going to preview Meta, and we have Amazon tomorrow night, we have Apple next week, and don't forget that we also have that Fed meeting next week, and then we have the all-important April jobs report here. So if Microsoft is as good as it gets in earnings season, I think we come in after we get through this week. Look at this CBOE volatility index. That would be the VIX here. And we look at it at levels it has not traded at since the start of 2022. That was when the S&P 500 was at 4,800. Here it is right now, just below 4,100. And the other one, last thing here, guy, this 10-year U.S. Treasury yield, it's kind of contending with this 3.5 level. Maybe psychologically that's an important sort of level, but that's not particularly bullish to me, okay? Because if you are buying treasuries because you're in fear of all this other stuff, that means rates are going down. So this is a bit of the fear trade, if you will.
No question about it. You're probably going to see a continued bounce in the dollar. We had a conversation about that yesterday, somewhat counterintuitive if this debt ceiling gets pushed off, because as I mentioned yesterday, you could see a scenario where the dollar rallies and then people say, holy shit, we shouldn't be buying the dollar here. Yeah. The dollar's vulnerable. I think that's going to play out a little bit, but the bond market, I think there will be a flight to quality in the form of bonds. And as we've said, with Danny Moses of The Big Short fame, who is our partner on the On the Tape podcast, which, by the way, drops in your favorite podcast stores. I love saying that.
Is yours Stitcher?
Every Friday.
Where do you listen to your podcast stores?
Stitcher?
Yeah.
I'm not sure where I got. I mean, it's just they come to me through the cloud.
I'll show you.
By the way, subscribe to our YouTube channel and smash the shit out of the like button. And if you want to send an email, it's contact@Risk Reversal. Funny anecdotal story, and nobody cares.
Well, wait. So we'll be the judge of that.
If it's funny?
Yes.
We're sitting on a set of Fast Money years ago. Erin Burnett is hosting the show, and I'm friends with Erin. I've known her a long time. And I looked at her in mid-question. She was asking some, dopey question about something. And I stopped her. I said, what's your favorite movie of all time? And she was taken aback at sort of the abruptness and sort of, it was a non sequitur. I don't know how to spell that. And she said contact, which stopped me in my tracks.
McConaughey.
It stopped. I mean, I'm a person that can sort of, I can go with the flow.
Yeah.
That can't, what can you say?
Yeah.
Nobody's favorite movie is
Jodie
Contact.
Foster.
Jodie Foster's favorite movie is in Contact. No. Nobody's, but that was hers. Anyway, it's contact@riskreversal.com. That was my funny story. If you don't think it's funny, make comments about it. I don't care. I mean, you make fun of me about everything else. I think
you're going to get a lot of thumbs down in the chat there. I would say one thing. I don't know if you saw this. I saw this in the FT this morning. So Stan Druckenmiller, he was of Soros fame. He runs Druckenmiller Family. Or is that what it's called? Druckenmiller.
I believe it's a family office now.
So here's a guy. They kind of. They made a run on the pound. You remember this back in 1992? Successful. And so it was just interesting. He said this in the same light. Okay, he said, I missed the trade in the dollar last year. He said it was one of his worst misses ever because he didn't want to buy Jay Powell and he didn't want to buy Biden. That was the quote that I read. Okay, so now we've round tripped that whole move. We talked about the U.S. dollar index, the Dixie, yesterday, and we just thought using the futures, using a stop, it seemed contrarian. And if you're going to have a flight to quality as it relates to treasuries, you might also have that in the U.S. dollar, except for it's the U.S. dollar might be the thing that's impacted by a default.
That's right.
So I get it. Okay, I get it, but that's likely to be short-lived. All right, and so I just thought that was really interesting. He's betting against the U.S. dollar right here, and I just think in the near term, and you could say, who the hell am I versus Stan the Man? I'm kind of Dan the Man, or no, it's not going to stick.
No.
I would just say
I'll come up with something, but it's not that.
It just seems like it has the potential to bounce here at an important technical level. And maybe that's where you want to lay it out into this, if this thing gets dragged out, that sort of thing. So I just wanted to make that point because that was a headline I saw this morning.
And I agree with that. And by the way, all roads seem to lead back to, now Bitcoin's having a day.
Yeah, it is.
It's up, what, 10% or something ish.
Yeah.
But gold's been having a series of days. Gold is hanging in there. And apparently one of the more searched things out there on all the websites, which if you search, you type something in, is how do I buy gold? So now more and more people are starting to come around. Wait a second. The world is sort of appearingly going pear-shaped. Maybe they want to be in gold. And it's hanging in here. Typically, if we make that new high, we have failed. Go back if you can extend this chart out, you'll see exactly what I'm talking about. The last time we got up here, it was a pretty precipitous drop-off. Well, this time we're sort of hanging in there, folks. And I'm here to tell you, as Louise Yamada of Yamada fame will say, the longer the base, the higher in outer space or something. So if we can base around these levels, I think it takes the next leg higher. And as I mentioned before, I think Danny Moses of the Big Short fame thinks exactly the same.
All right, let's do it.
Is it time?
Yes,
Is it that time?
You've laid down the gauntlet here, guy. You said that you're going to do for Sean Ryan.
I'm going to.
For Sean Ryan, what you've done for Butters. And that would be John Butters of Earnings Insight fame.
Yeah.
Okay, so let's bring him in here.
Yeah.
He's the man, the myth, the legend.
He's the financial sector lead at FactSet. That sounds very military. Financial sector lead, like, you're out there in front and you got, you're just ready to, people are following you. You're like, you go over there, you take the right flank, and I'll stay right here in the middle and all the shit. By the way, how are you, Sean?
Okay, thanks. How are you doing?
We're doing great. By the way, I mean, if you think about it, financials, historically, financials have been pretty boring. Let's just face it. I mean, somewhat utility.
Well, other than that 08, 09 period. Okay.
Historically. Okay. I mean, but when they come to the forefront, it's typically for some really weird reasons. And we're seeing it now. Everybody's seemingly talking about financials. So I know we have some charts and stuff, but let's look at it sort of at a 30,000-foot level. Things have gotten really interesting in your world.
Yeah, no, you're absolutely right. Harry Keefe, the legendary bank analyst, namesake of KBW, famously said that banks will always trade between hatred and apathy. And so now we're at hatred. We're getting some attention.
Yeah. So, Sean, it's interesting. And to Guy's point, again, these banks, they always trade at a discount to the market. You were an analyst for a very long time. Now you do a lot of work there, compiling a lot of data sets from all over the industry as you think about, right, like the industry as a vertical here. I got to tell you, like what we saw in March really did feel a lot like some of those kind of vibes that we had in 08 and 09. Now, I know a lot of folks were saying there's nothing really that systemic here. Okay. And I think and I'd love to hear a little bit about your thoughts about the speed in which the FDIC, the Treasury, they were able to kind of corral some of the large money center banks as it relates to First Republic, and just the extraordinary actions that they took, especially at a time where it looked like they were really focused, at least the Federal Reserve, on working down that balance sheet. And some people were not calling it quantitative easing, but for all intents and purposes, the Fed's balance sheet has increased, right? Since the kind of lows in March, if you will. Put some context in what that March period was, because you're not suggesting that it's over. You're not suggesting that it's systemic, but you do think that there's going to be other palpitations that we feel in the not so distant future.
Yeah, I think that's exactly right. I mean, of course, it's not 2008, but 2008 isn't the measure of all crises. There's some parallels with 1994 as well. And the late 80s too. From the highest level, you have to start with the fact that we're coming out of 15-year period where the price of money has been near zero, and so the scale of the misallocation of capital when the price was at zero for such a long period of time is only starting to become evident. And so when we look at banks, we're seeing just the very beginning of credit quality deterioration. It's not bad yet. It's really just becoming less good. And you get a lot of commentary that's sort of somewhat upbeat, saying, hey, it's just mean reversion. And it is, except mean reversion doesn't usually stop at the mean. There's going to be a lot of risk that manifest into actual losses here. Pockets like commercial real estate, which is starting to get some attention, autos, which probably isn't getting enough attention. And so, you've got those risks that are sort of slower moving. And then in March, you suddenly had this liquidity crisis erupt. And, some of those factors were well known, the unrealized losses in held to maturity portfolios. But then at the same time, certain others we really haven't had experience with in the past, like the massive outflow of uninsured deposits. If you go back to 1994, the held to maturity losses look a lot like what we have now, but you didn't have that cohort of mid-cap growthy banks with huge shares of uninsured deposits, and that's what erupted in March. And so that settled down. You no longer have the sort of rapid spike in banks being reliant on Fed liquidity. It's leveled off, but at a very high level. We're really only about 13% off the high right when Silicon Valley failed. And so that leaves banks in a vulnerable position. We've come through an earnings period where earnings were not bad, kind of mixed, a lot of downward revisions to guidance. But again, it's really, I think, anticipating sort of best case scenarios in terms of credit deterioration. You're definitely going to see some more margin compression, and credit. We just really haven't going to grapple with that yet, and that's looming out there. So I think there's still a lot of risk here.
Well, Sean, like the PLL, the Premier Lacrosse League or Professional Lacrosse League, or whatever the P stands for, not all teams are created equal in that league, and not all banks are created equal either. And you brought with you a slide to sort of illustrate exactly that. The bank crisis in remission, but not over. And there are different banks that have different exposures, and I think we're sort of separating the wheat from the chaff. So as I said yesterday, sort of slide it, Earl, in terms of the graph and slide you brought, and let's discuss this.
Sure. So what you really saw in terms of Moody's just downgraded a raft of banks again, and if you look at that list of banks, it looks a lot like the list of banks people compiled in March when you looked at that sort of nexus of who's got outsized held to maturity losses and who has outsized uninsured deposit ratios, and that's your kind of real bullseye of vulnerability, and that's the really the list we're looking at here.
Yeah, it's so Sean, when we think about this list here, and again, these names have become very familiar, I think, to a lot of investors who might not have even been focused on regional banks as like a class of stocks that they might invest in. Okay, but all of a sudden we're seeing, we saw SVB. their equity go to zero. We saw that in Signature, right? And so we're seeing this right before our eyes, with First Republic here. Talk to us a little bit about the risk of just kind of the equity base of some of these companies now that have to kind of lessen, I guess, the weight of their balance sheet here, because it just seems like, First Republic was flatlining after it got that 120 billion, right, of deposits, and was for a short period. Or was it 90 billion for 120 days?
It was
30 billion.
Oh, 30 billion.
Sorry, 11 banks, 120 days.
And it wasn't until their earnings, right? And then, obviously there were downgrades in there where I guess investors just realized that this equity is not going to be worth anything. Talk to us a little bit about that. And when you talk about the space being in remission, or at least the crisis being in remission, are we likely to see more equities kind of being wiped out for all intents and purposes? I don't think that we're going to see any of these go under, and we're not going to likely have another run that is going to be deemed to be systemic, because it just seems like the powers that be are going to backstop that. But equity valuations, or equity in general, seems to be the thing that's got a target on its back in the space.
Right. I mean, in a way, First Republic, the risk factors there aren't unique. What's unique at First Republic and at Silicon Valley and at Signature is that those risk factors are just all cranked up to 11 there, in terms of the magnitude of the unrealized losses and the vulnerability to liquidity problems with the uninsured deposits. And so, those risks exist across the financial sector. Banks have been bleeding deposits really since rates started rising a year ago. But you just don't have those risk factors in the same extreme levels at most of these other banks. And so First Republic, the lone survivor of that cohort so far, is really kind of an outlier, I think, relative to those other banks, where you're still going to have problems. You're still going to have pressure on earnings, and it still may be more than is built into expectations so far. But yeah, I think unless and until you start to see really credit problems start to manifest themselves, you probably don't have that sort of risk of something becoming a goose egg.
Sean dropping some serious Spinal Tap knowledge there.
211.
Nigel Tufnell. By the way, if you haven't seen This Is Spinal Tap, folks, I encourage you to go to your local Blockbuster this weekend and rent that, because if you don't laugh at that, you're not a human being. But with that said, Sean, I've posited that interest rates could go back to zero, and that's not necessarily going to loosen credit conditions. Regulation is coming. Lending standards are going to be more vigilant, I think. I think banks will be more focused on things, and it's not about interest rates now. It's about, hey, wait a second, we got to sort of tighten the screws, and that's going to have ramifications. Am I off base there, or am I onto something?
No, I think you're exactly right. We're starting to see that in the weekly Fed data, where they, come out every week with the aggregate balance sheet of all U.S. banks. And you're starting to see that in terms of the aggregate loan totals. In about a week, we'll get this quarter's SLOOS. That's the Fed's senior loan officer opinion survey. Now, that's a data set that has some predictive power historically, and that'll give us a sense from those loan officers of the trends in both the bank's willingness to extend loans and customer demand for loans. And so it'll be interesting to see what that trend reveals. This most recent survey, that survey went out to those loan officers right after Silicon Valley failed. And so, the events of March should be factored into whatever the results of that survey are. We should see that in about a week. That'll be interesting. But I suspect it's going to further validate your point there.
Yeah. All right. Well, listen, Sean Ryan, this was your maiden voyage here on the Market Call here.
The Titanic had a maiden voyage.
This went a lot better than that.
Didn't go particularly well.
This went a lot better than that. Sean, we really appreciate you. We appreciate you coming on here. Hopefully you'll come back here once we maybe kind of get a wrap of this kind of Q1 sort of earnings season here, and we'll just kind of get a better read on some of those issues that you are flagging as it relates to credit on the other side of this liquidity event that we've had, and we're still seeing this kind of wind down.
Couple people asking, Sean, do you have a Twitter account? My sense is probably negative ghostwriter. The pattern is full. Am I accurate in that?
I'll have one set up by the next time I'm on.
I like that. Don't do it on our account. But then people are asking, where can they find your work? Obviously, they can probably go to the FactSet website, but is there an easier way to sort of grasp that, find it?
Yeah, so if they can go to the FactSet Insights website, and it's all posted there, or they can reach out to me at sean.ryan@factset.com, and we'll be happy to get them on the distribution.
Easy enough. All right, so it's inset.factset.com is where you can find his work. So Sean Ryan, thanks for joining us here. We really appreciate it, and we will see you again very soon.
Thank you. Have a great day.
All right.
I think Sean Ryan.
You know, here's something.
Can I tell you something? I think, am I allowed to say that?
I know, smart guy. And I like a guy who sits in front of his bookcase there. He's not afraid.
Well, I was going to ask him,
yeah,
but I didn't do it. Next time I'm going to say, I'm going to say, Sean, I want you to do this. I want you to turn around and grab a book, any book, pull it out of the bookcase.
Did you read it or not? You ask him.
No, I'm not going to do that. I'm going to see if Swizzle has read it. I'm speaking in the third person.
Yeah.
Because as you know, I do read books from time to time.
Not anymore. I mean, you're the sort of guy, if you sit down at 9 o'clock and you open a book, you're going to fall asleep.
9 p.m.
9 p.m. Yeah. You're going to fall asleep.
No, at 9 p.m., unless it's a weird, like sometime in February when there are no sports. Yeah. I'm watching something.
All right, let's pull up
cares,
the JP Morgan, the 1 year chart here.
Not good.
No, so I want to mention this. This is really interesting. So we said the same thing that we just said about Microsoft. We said about JP Morgan when they reported. Remember that? It was April 14th. They reported that day. It was up 8%. And we're like, this might be as good as it gets for all the financial.
Look at the levels.
So look at this thing. Let's see if
I know, because I know exactly what it's going to look like.
No, can we look at a 1 year here, people? We look at a 1 year and then we look at a shorter term one. Okay.
There you go.
All right. But I want to see the gap. I want to see that gap from earnings. And so if it fills in that gap, okay, see that. And now let's blast this thing out here. Look at us just use the FactSet charts here. That level where it gapped to on April 14th on the opening, that's a really important technical level here, people. I'm just saying that. Okay. I feel the same way with Microsoft. That's why I feel pretty confident that this thing is not going to build a new range. This would be Microsoft now establishing it above those prior highs here. So again, I think that this is pretty interesting. Keep an eye on JP Morgan. All right, Guy, let's hit Facebook. This is going to be one that I think is interesting.
I'm terrified to even talk about. No,
why?
Because Microsoft, I was so convinced that Microsoft would report whatever it does, conference call, stock would be down 10%. And the exact opposite happened. So now I'm going to go out on the proverbial limb again, but that's what we do here. So anyway, let's talk about it.
All right. So the implied move in the options market is about 9% in either direction. That's nearly $20. Okay. And when you think about this and think about the move that it had, I mean, the stock at its lows, I think it was down like 77% from its all-time highs in late 2021, traded as low as maybe $87.50. Here it is up at 211 here. You see that prior high that's come off, a little bit, right? 221 down to 211. It's, not nothing crazy, 3-4% or something like that here. Given today's move, I don't know, man. I just listen. This is how I feel like a lot of these earnings events. Like, you don't really have to be a hero in front of them. You know what I mean? Like, you don't have to take a position. I felt very convicted in Tesla a week ago or a week and a half ago. And that's how I wanted to be positioned in that. That's been a position that I've been riding for a while. But I look at a Meta and I look at how far it's come. And I look at that gap that we had back there in early February. We look at the reasons why they're continuing to cut costs here. What Google just said to us about ad spending didn't seem disastrous, Guy. Okay. So digital ad spending here. So maybe they're at a spot where if we pull this thing out and we want to go to 5 years here a little bit, is there room up to that gap? You know what I mean? From last year,
I think that's exactly right. I mean, that's what people
are
looking at
for it. That's what I'm saying. I wouldn't buy that right here.
Except what could potentially happen is, you fill a gap and then subsequently create an end gap to the downside. Yeah. So that's what this is setting up for. You look at the moving averages is turned up. I mean, yes, the ad spend on the it wasn't disastrous. Like Google ad spend suggested that things were not falling off a cliff. That should lend itself to some residual strength in Facebook. And despite the fact that Facebook's rallied 100%, valuation-wise, you can still make a compelling case. And they seem, all the Meta stuff, and that seems to be ancient history. Like, nobody talks about that anymore. And they seemingly did a bit of a mea culpa there. So maybe Facebook gets back to, in some ways, being Facebook and surprises people. And we see it fill in that gap. By the way, somebody saying that I bet Guy bought the first iteration of The Prince, of course, book written by Machiavelli. That's very funny in Florence.
Pretty funny. Yeah.
Our people crack me up. Anyway, that's what it's setting up for. But if you do see that move to 258 or so, filling that gap.
It's 250. I mean, like that gap is pretty fascinating because it was also a support level going back to early 21, late 2020 there, and it capped right there. And when it went to 250, I mean, it went to 100, like in months, which is pretty shocking here. So listen, you know what? If they're able to continue down this path, right, of cost cutting, it seems like Zuckerberg has finally kind of stemmed what was a disaster. Well, it was a disaster on two fronts, right? So the blue page, the main page, and then all that spending for the metaverse, all the over hiring that they did here. And it seems like they really had something going on with Reels. So I don't know. I just don't think it's that tradable, guy, to be honest with you. I mean, like,
I think it's tradable after we're not trying after the fact. It's going to be very tradable. If you get that gap to the upside, I think you're looking for a huge move, then subsequently back down to fill gaps, which will be created.
Okay, so let me give you a good example of why I don't think it's a great trade with an implied move of 9%. However, whether you're going to buy the stock, whether you're going to short the stock, whether you're going to buy calls, whether you're going to buy puts, whatever you're going to do. The best trade is probably selling, a strangle if you're long the stock. Okay, that would be selling an out of the money call and out of the money put and just kind of taking in that premium. But I'm not suggesting that. Look at Google. It's basically flat on the day. Okay. So the implied move for the Google was 5%. Okay. So option premiums have gone
squished.
Like yeah. Okay.
Theta bleed.
If you were inclined to be long Google into the print, nothing that they said should keep you from running from the stock right here. Okay. Like in my opinion, now nothing's all causing you to go out and buy it. I might wait another day. Let's see if it gets back to $100 and then maybe you do it. And then the other thing is we had Carter on it and we're going to revisit this. Carter liked the idea of a pairs trade, short Microsoft, long Google. Now, right now, at this moment, if you liked what he had to say, but you didn't do that trade, this is actually the time to do that trade. I mean, for all intents and purposes. So, I've lost so much money trying to pick a direction over my 25 years in the business because it's action. It seems real fun, right? Like when you get them right, it feels great. When you get them wrong, you're like, oh, that was kind of obvious.
Ronan is saying, and that was a nice.
What's Ronan saying?
I don't know, because I don't understand these things. I only watch your show because you often drop some nuggets. I actually drop nuggets every day, depending really what my diet is that morning. But you're running the risk of being a JC. I don't know what that means, or ANR. It should be NNR, I think. Maybe cool with the predictions. Fair, Ronan, all fair. But I just don't know what the JC or NR
you have
is.
No idea what
I really don't. Maybe Ronan, that was a great movie, by the way, with Robert De Niro.
It was not a great movie.
The car chase in that movie,
Gene Russo,
was amazing.
Yeah, but
it really was.
The whole movie for an hour and a half was a car chase in like France.
Yeah, hey, they drove pretty.
De Niro, I got to tell you, he's got some stinkers.
No doubt about it.
I mean, there are,
but no more. By the way, it's Al Pacino. Yes, you're right.
No,
he's Al Pacino's 83rd birthday yesterday. Think about that.
He's taken a lot of pages.
Who's had worse movies, Pacino or De Niro? Pacino.
Oh, well, Pacino in the 90s was just a train wreck. I mean, he was just like, ooh, you remember that one? Yeah. I mean, like that. Yeah. You know who does
I see what now they're explaining.
You know who does an amazing Al Pacino, and maybe
Danny Moses.
No. Bill Hader. Bill Hader.
Isn't he the closer for the Brewers?
No. Bill Hader with a D.
That was pretty good.
Okay. Bill Hader
if Liz was here,
an absolutely amazing Al Pacino. Maybe we can put that in the feed somewhere. All right.
That's it.
Yeah, we did it.
No, I'm sorry. I apologize.
We got off the rails a little bit. Some people don't like us sitting across from each other like this.
I don't know what to tell you. We do the best we can. I don't know what to say. Sean Ryan, I like Sean Ryan. We're going to have him back.
Guy.
Yes. And I'm going to do that book thing with him. So, I don't know if he's listening or not.
You know what's funny? When you said the book thing, going back to Contact, okay, so that was McConaughey, space movie. Another space movie he did. Hold on, Interstellar. And at the end of the movie, no spoilers here, there's a little something with the bookshelf. Just saying.
Really?
Yeah.
They're not space. They're dumb movies is what they are. There are no good space movies.
Interstellar by
that's not true.
Nolan.
Apollo 13 I thought was very well done.
Movie. I mean, Tom Hanks, no stinkers.
No, that's not true.
What?
I'm not prepared to answer that, but I guarantee
you could maybe say Bachelor Party, but that put him on the map a little bit after Bosom Buddies.
He's done a good job.
Did you like the Bosom Buddies?
The one where he plays the captain of the ship that gets attacked by pirates.
What
Captain Phillips or something?
I'm the captain now.
Except that Explain to
captain
me
now.
how you can be in this very large vessel, and these cats and rowboats
they're rolling up with
coming up. So what? They have nothing on there. They have nothing. They have no. They're not armed.
No. I think honestly, I think there's some rules. It's like marine law or something, like about having guns on a boat.
Maybe they should change the law.
Yeah.
I mean, everybody else seems to have guns.
But
if you think about it,
other than the Captain Phillips, did you see the Sully movie?
No.
Amazing. What else? Name a stinker.
I don't know. I can't think of any. I'll tell you, Platoon. Saving Private Ryan.
Oh, it's amazing.
First 15 minutes. That's you.
Steven Spielberg.
Tears to your eyes.
He's absolutely. I will tell you this. Last night I saw. I don't know why, but HBO had it on their new Max. They had the trailer.
HBO
if
Max.
you guys have not seen this, it's a 10-part series. Band of Brothers. David Ambrose wrote the book. It's a 10-part series that actually, Spielberg and Tom Hanks produced. It was absolutely, and the guy that you love from Homeland, you know, the ginger, the redhead.
Yeah, sure.
He was a star of that.
Ginger.
You know what's that's not derogatory. That's what they call him. But they did
He's
not
British, that guy.
Yeah, they did not have him as a redhead.
What? Yeah, maybe he's not a redhead in real life. By the way, we heard
he is a redhead in real life.
We heard from Wilford yesterday.
Wilford Frost.
Yeah.
He didn't get that you were I said you were being cheeky.
I was winding him up a little bit.
So guy made a comment. Our friend Wilford Frost, he's a Brit. Yeah, and he texted a guy and me. We're talking to him, and he used to crush it on the closing.
I love Wilford.
Sarah. That was a great combo.
I love Wilford.
Yeah.
Anyway,
people
are tired of us. Amanda's going to text me. She did. Rap. Amanda, just so you know, I don't know if people.
She's going to cut all that off the YouTube, so don't worry about it.
I can't. But she's telling us to rap.
So that's it.
Sean Ryan killing it.
Yeah.
Financial sector lead at FactSet. Thank you. He will be back without question because financials aren't going away. The stories around them.
He was great.
I obviously want to thank FactSet, financial data and analytics powered by Tomorrow. Tomorrow, by the way, speaking of tomorrow, is Thursday.
Yeah.
That's an EY from SoFi Day. And I guarantee some butter shit will drop that we will put in. And we just say butters, and everybody puts butters in the comments. That's what we're going to do for Sean Ryan. And that's it.
Yeah. All right. That's great. So, Amanda, just for the YouTube and for the podcast store, let's cut out that last bit here a little bit. But that was a lot of fun, guys. Thanks for joining us. Sorry about that. Hopefully, you got a little insight into just Guy's brain and how it works.
Doesn't work.
All right. See you guys. Thanks.